Well, moving on, SBI Life shares are down over 3% following its Q3 earnings that the company reported yesterday. Our colleague Yash caught up with Amit Jhingran, MD and CEO of the company, and began by asking him on the way ahead for the company in the coming month. Let's listen in.
Whatever we had guided for at the end of the first half year, we are happy that the company has been able to deliver as per our guidance and as per market expectation at the end of 9 months. What we have always been insisting is that instead of looking at month-to-month variation, we should be looking at the medium-term and long-term growth trend. And as you have seen that we have been able to meet our guidance in the past also. We are very sure that notwithstanding the month-to-month variation, our overall numbers will be as per our guidance.
Overall numbers will be as per our guidance, but just one word from you on January. We won't go into specific numbers, but looks as strong as it has been in the previous few months.
So January is still going on. We see that how the number pan out at the end of the month.
Okay. One question as far as growth and margin, both factors are concerned, your APE as well as your margins. The market, you've already are at the point where you had guided for. In fact, on a couple of aspects, you're ahead of your guidance. What is your stand as far as the annual guidance for APE and margin is concerned? Do you see improvement ahead of what you had guided for?
We are happy that both on the top line front as well as on the bottom line front, the margin front, we have been broadly sticking to whatever we guided for. And we are in the same range as far as VONB margin is concerned. We talked about 26 to 28%. We are in that range.
You are at 27.8.
Yeah, so we are within that range. As far as APE growth is concerned, as far as IRB growth is concerned, we talked about mid-teens and we have been able to stick to that. So at the fag end of the year, in the last quarter, we do not want to change any of our guidances, and we will go ahead and we will ensure that we stick to our guidance, and maybe we'll have a positive bias also.
You said you'll have a positive bias, but let me just put a couple of numbers to you which already indicate towards a positive bias. You had guided for APE guidance of 13 to 14% for the year. For 9 months, you're standing at 15%. For margin, you had guided for 26 to 28%. For 9 months, you're standing, as I said, at about 27.8%. What kind of positive bias are we talking about here? Because on AP, you are ahead of your guidance. On margins, you are closer to the higher end of the margin bracket that you had guided for. What kind of positive bias could we get to see if that indeed comes through?
So, you are basically asking me to recast my number. And as a company policy, I will not do that. We will stick to our guidance and we will ensure that we overshoot our guidance numbers.
Okay. One question as far as the PAR book is concerned. Very strong traction seen in the quarter on the PAR portfolio. What has led to this strong traction in quarter 3, and does it continue going ahead as well?
So as far as PAR product is concerned, if you remember in the third and fourth quarter of last financial year, because of the surrender value guidelines changes, our PAR product portfolio had become very limited. And in this financial year, in this quarter, we launched new PAR products, specifically in the child segment and also in the money back segment, and our distributors, they lapped up this product, both the segments, child segment as well as the money back segment, and because of the lower base, it has shown substantial growth.
Correct. As far as the product launches for the coming quarter are concerned, which side of the business could see higher number of product launches coming in Q4 as far as the overall book is concerned?
As on date, we see that our product portfolio has a very balanced product mix in all the lines of businesses. So we continue to evaluate new opportunities, and we will continue to do that. We have some non-par product which was launched in this month, January itself, middle of January. And going forward, we will continue to look into the annuity segment and also some more product in the non-par and also protection product.
Okay. You spoke about the non-par segment. There was, of course, a product launched in the non-par segment as well. How's the traction been on that non-par side, on the new product launch side so far? And as far as, you know, the coming quarter, and you said new launches in the non-par segment is concerned, could we get to see pick up in the non-par segment yet again?
Non-par segment, in fact, all our lines of businesses other than ULIP have seen multifold growth. Within the overall APE growth, the ULIP growth for the 9 months is only around 7%. Some of the non-par growth, of course, as I told you, shifted to the par segment because of the new product launches. But we are seeing a very balanced kind of growth in both these segments, and also in the very robust growth in the protection segment also.
Well, robust growth in the protection segment is what SBI Life tells our colleague Yash. But before we slip into a short break, a quick heads up